Alright guys, and our news here says Wall Street veteran, 3 reasons I'm paying close attention to XRP, right? What if holding just 1000 XRP could turn a modest investment into a life-changing $10 million? It sounds like an unfathomable claim. But when a Wall Street veteran with 25 years of institutional trading experience backs it up with a $500,000 wager against legendary market bears, the entire financial community pauses to listen. We are looking at a massive shift in how traditional market insiders view digital assets. So in this breakdown, we will examine the bold analysis shared by crypto analyst and educator Thomas Laresca right here on social media platform X. Then we dissect his core reasons for backing XRP and evaluate what his institutional perspective means for everyday investors like us. So let's start with our very first question about who is Thomas Laresca right here and why does his Wall Street background matter for XRP. So to understand why this perspective carries so much weight across trading desks, you have to look at the track record behind it. Thomas Laresca, or also known as Crypto Vice XRP, is not an anonymous influencer chasing short-term viral momentum. He brings 25 years of hands-on experience, right? Navigating the complex machinery of Wall Street. During his quarter-century tenure in traditional finance, Laresca personally reported 3 separate companies to the Securities and Exchange Commission, or SEC, all 3 of which were subsequently shut down following regulatory action. Now, Laresca has publicly stated that he dedicated thousands of hours auditing XRP, its underlying ledger infrastructure, and its regulatory trajectory. He uses this regulatory and forensic background to evaluate digital assets through a strict institutional lens rather than speculative hype. Now, here's my opinion. I find that background matters tremendously when analyzing crypto assets. Most retail investors look exclusively at daily price charts, but institutional veterans look at systemic structure, regulatory compliance, and risk metrics. Someone who has spent decades working within strict regulatory frameworks and who actively expose fraudulent corporate entities to federal authorities brings a rare layer of credibility. When a trader with that level of institutional exposure commits thousands of hours to in evaluating XRP, it tells me that the institutional thesis for cross-border utility is far deeper than mere retail speculation. Now, what are the 3 key reasons Wall Street insiders are paying attention to XRP? In this public breakdown shared on X, Laresca outlined 3 central pillars driving his high conviction stance on XRP. And here they are. Improving regulatory clarity, expanding real-world utility, and prioritizing structural adoption over short-term price movements. So first is the regulatory progress, particularly within the United States, has fundamentally transformed how major financial entities view the asset. Establishing clear legal parameters gives conservative institutional capital the green light to participate without fear of sudden enforcement actions. Second is real-world utility in global cross-border payments continues to scale. XRP was built to solve real liquidity inefficiencies in international banking, transferring value in seconds at a fraction of a cent. And third, Laresca emphasizes that sustainable asset value is built on long-term infrastructure integration rather than speculative market cycles. Now, here's my opinion. These three pillars represent the true foundation of long-term asset valuation. I've seen countless crypto projects pump on artificial hype only to collapse when liquidity dries up. XRP is different because its core architecture targets a multi-trillion-dollar institutional pain point, where legacy cross-border settlements. Improved regulatory frameworks acts as a massive gateway, allowing global banks and payment providers to utilize this technology openly. When real-world utility expands, long-term adoption naturally follows, rendering daily price swings secondary to the broader structural shift. Now, how can everyday retail investors like us benefit from XRP's institutional trajectory? One of the most compelling aspects of Laresca's analysis is that his message targets everyday retail participants rather than high net worth funds. He publicly noted that this asset class has the potential to generate extraordinary wealth for individuals allocating just a few $100s, provided they approach the market with patience and discipline. Unlike traditional Wall Street investments, private equity deals, or venture capital funds that require accredited status and millions in capital, digital assets like XRP offer equal public access. Laresca's core message to retail participants is simple, and that's stay patient, remain disciplined, and perform diligent personal research instead of panicking during market shakeouts. And now, here's my opinion. This is where the true power of decentralized technology reveals itself. Historically, the biggest financial opportunities were locked behind institutional doors, leaving retail investors to buy in only after the massive gains had already been realized by Wall Street. So as a market observer, I believe XRP levels the playing field. Anyone with an internet connection can acquire a position in a settlement network designed for global finance. However, retail investors must pair this access with discipline. The biggest mistake everyday participants make is reacting emotionally to short-term market volatility rather than maintaining a long-term strategic horizon. Now, can a 1,000 XRP really reach $10 million in 5 years? The most headline-grabbing projection from Laresca's post on X is his bold claim that holding 1,000 XRP could yield $10 million within a 5-year time frame. Mathematically, for 1,000 XRP to equal $10 million, a single XRP token would need to reach a price of $10,000. This valuation implies a massive market capitalization that far exceeds traditional crypto metrics. However, proponents of this extreme valuation model argue that if XRP becomes the primary neutral bridge currency for global central bank digital currencies or CBDCs, international trade, and real-world asset or RWA tokenization, price models must account for total global liquidity flow rather than standard circulating market caps. Now here's my opinion. A $10,000 price target per token sounds extraordinary when compared to current market prices. It requires an absolute transformation of the global financial architecture where trillions of dollars in daily liquidity run directly over the XRP ledger. While achieving a $10 million valuation on a 1,000 XRP holding over 5 years is an extreme theoretical best case scenario. The underlying logic highlights just how asymmetric the risk to reward ratio could be. If the asset reaches only a fraction of that ambitious target, the upside potential for patient holders remain remarkable compared to legacy financial instrument. Now, why is $500,000 bet against market skeptic Peter Brandt so significant? Laresca didn't just share a speculative price prediction online. He put serious financial backing behind his words. To prove his conviction, Laresca publicly issued a $500,000 or 500,000 XRP challenge to renowned market skeptic and veteran chart analyst Peter Brandt, who commands over 1 million followers on X. Peter Brandt has historically maintained a critical stance on XRP's chart patterns, often predicting major downside breaks. By offering a $500,000 wager against a high-profile skeptic, Laresca demonstrated that his 25 years of Wall Street analysis isn't just theoretical banter. He is willing to lock up real capital to defend his thesis. Now here's my opinion. To talk cheap in the cryptocurrency industry, but to put up a $500,000 wager and suddenly everyone takes notice. So I respect when analysts put skin in the game. Wall Street veterans don't offer $500,000 bets casually. They do it when their quantitative research shows a profound mismatch between public sentiment and actual fundamental value. Challenging a prominent bear like Peter Brandt creates a fascinating battle between traditional technical chart analysis and institutional fundamental utility. And finally, here is our overall conclusion. When a 25-year Wall Street veteran like Thomas Laresca steps forward to outline a bullish case for XRP, it signals that institutional perception is evolving rapidly. Its emphasis on regulatory clarity, real-world utility, and long-term discipline provides a clear roadmap for how macro investors view this asset. While a $10,000 price target per XRP and a $10 million payout on 1,000 tokens represents an ultra-bullish scenario, his willingness to back that outlook with a $500,000 public wager against Peter Brandt highlights remarkable conviction. So for us, the key takeaway here is very clear. Focus on long-term infrastructure adoption, remain disciplined through short-term market noise, and recognize the convergence of Wall Street and digital assets is happening in real time. And this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.